Early on Friday, the US dollar index was trading above 105.20 points. It was intended to close the second week in a row with a rise. The possibility that the Fed Reserve will keep the key rate unchanged is still the main driver of the greenback. Curiously, at the meeting in June, the regulator not only maintained the benchmark rate at the current level but also announced only one cut this year instead of those three discussed in March. At the first sight, the decision was taken despite the recent macroeconomic data. The fact is that consumer inflation and producer prices unexpectedly dropped in the United States. However, this was not enough for the US regulator. It has repeated several times that it needs a stable and a long-lasting decline in inflation towards its target level of 2%. However, the situation is different at the moment. In this light, the Fed's stance remains hawkish, whereas the US dollar is planning to close one more week in the green. Let us shift our attention to the events that will determine the market situation on June 17-18. You are watching Traders Calendar. The new trading week starts with the crucial reports on China's industrial production. In April, the sector of the world's second-largest economy expanded by 6.7%. There was a notable acceleration in the production of computers and communication equipment, jumping to 15.6% from 10.6% in March. However, the forecast for May's overall industrial growth was lowered to 6.4%. US sanctions targeting China's AI-related companies seem to have an effect. This dip in industrial activity could weaken the Chinese yuan against the US dollar. However, the yuan's decline might be offset by strong retail sales reports. In April, China's economy saw a 2.3% rise in retail sales. Notably, forecasts for May suggest an even greater increase to 3%. Such an acceleration will signal a recovery in consumer demand. After Beijing took various measures to boost spending, an increase in the sales will be positive for the yuan, allowing it to gain value against the US dollar. On Tuesday, June 18, all eyes will be turned to a statement from the Reserve Bank of Australia. It's likely to keep its key interest rate at 4.35%. Policymakers are taking into account inflation in the services sector, which continues to rise despite efforts to control it. The Australian Central Bank also expresses its readiness to respond to changes in the macroeconomic data. Maintaining rates could support the Australian dollar if inflation risks remain under control. Later, the focus will be shifted to Europe, where the inflation report will be published. The annual rate is expected to climb to 2.6% from 2.4%. Soaring prices for energy and services are driving this growth. If the indicator matches the forecast, it could boost the euro against other currencies. In contrast, the economic sentiment indicator in Germany is likely to support the dollar. According to estimates, the indicator will slide by 10 points to 37 points, compared to April's level of 47.1 points. The US dollar will gain further support at the start of the US session amid the publication of retail sales and industrial production data. Consumption is expected to inch up by 0.1%, and the US industrial production indicator also stalled at 0 in April and is expected to grow. If it reaches 0.2% or at least climbs above 0, the US dollar will experience increased volatility and a potential rise against major currencies. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!